Thrilled to be here and be able to share with you a little bit of an update on who we are at Nuveen Natural Capital. And we have a lot of experts in farming, actually some of our properties in the room, so I'll leave that to you. I really want to angle the conversation more on investors and how they're looking at farmland, how they're looking at natural capital, and in particular, Australian super funds, and maybe an opportunity there. We'll kick right in. So a very personal picture of natural capital from my perspective. I did come to Australia 10 years ago for that $3 billion acquisition that was never meant to happen. Just by the way, in the meantime, I'm an Australian citizen. Just 3 weeks ago, I finally made it. But as all of you would know, there's a big piece of your heart that's always back on the farm. Actually, my brother, sister, father, and I will be closing on selling just 37 acres of our very small 250-acre dairy farm on our homeland here. And this was the picture the realtor did with the drone and put up on the real estate site when we were marketing that farm a couple of months ago. And I saw it, and it really shocked me. Didn't look right. And, a little history there. So that family dairy farm over time changed. We stopped farming about 20 years ago. Small family farms around Wisconsin just don't really exist anymore. We continued to crop the land. My brother was renting the land. And then just about a year ago, we rented out to a larger scale farmer that came in with bigger equipment. It was the first time we ever saw that hillside fully cropped in corn and not strip cropped, and that was the major conservation practice that my dad was always very proud of. Now that yielded one of the highest corn yields in Greene County, Wisconsin, but I still look at it and I think, is that the right way to farm the land? You look at the woodland, that we're selling now. What is the value of nature? Those mushrooms that I went hunting as a kid, that one tree that's left in the field, that's still the tree that I walk to when I go home after those long, long plane rides from Australia. And I think that valuation and how we look at the value of land will keep coming back in this presentation. So first of all, who is Nuveen Natural Capital? We are part of an investment company called Nuveen. We're owned by TIAA. It's a major US pension fund. They focus on retirement benefits for higher education. Nuveen overall has, if you can imagine, 1.1 trillion US dollars of assets under management across all asset classes. So natural capital sits within real assets of Nuveen, and natural capital is the umbrella of our farmland business, very well known as Westchester here in Australia, and also a timberland business known as Greenwood. So as we see the evolution from investors and what they're looking at, that natural capital umbrella came over a couple of years ago. And Martin Davies, who's the CEO of Nuveen Natural Capital and a huge friend of Nuffield, of course, is our global CEO. So if you look at our assets, we're highly globally diversified, actually across 10 countries, so not 15, not growing chia in as many countries as John yet, but I think someday we'll make it to 15. So we've got actually $12.4 billion of assets under management. About $2 billion of those are in timberland. And you can see, a heavy concentration in US farmland. And that's mainly on the value side. We have a beautiful viticulture business, mainly centered around the Napa Valley. If you have a chance to go there, give me a call. You can see some incredible assets. We have a horticulture business in California, and then a very strong US row crop. We're diversified across Brazil. Most recently, I've invested in Chile, where we're looking mainly at horticulture development projects to diversify the horticulture base. But of course, most importantly, here in Australia, we've been investing since 2007 with about 2.2 billion Aussie dollars of assets under management, with a very strong team. And Stuart is here somewhere today representing our team in Western Australia. We focus on row crops, and as you know, we're well known there for a model where we buy and lease back to tenants. But we've also recently invested in almonds, macadamias, where we work closer in operating the farms with third-party crop managers, and just very recently took a step into viticulture. So to give a little introduction to our investors, we're in a fortunate position where TIAA, our parent company, is a U.S. pension fund, is our cornerstone investor. That allows us to move into new investment strategies with more flexibility. But they're only 50% of our investment base today. We also have 50 additional investors around the world, US, Canada, Europe, and Asia. Where we don't have investment quite yet is from Australian super funds. That's what I want to talk about a little bit more today, and how natural capital feeds into that. So I thought, being in this room with a great thought leadership, rather than presenting an agenda, I put questions, and we'll come back to that, and hopefully engage in conversation through the breaks and late into the evening, given we couldn't find anything open last night. So first of all, how do we accelerate Australian institutional investments? And is there a way to open the door? I'll present a little bit of background on statistics there. In terms of investment outcomes that already came up in the last panel, can we have it all, that highly productive farmland, return on carbon, return on biodiversity? How does it fit into the landscape and the broader ecosystem? And then, finally, Australia is very unique. It's got an incredible biodiversity ecosystem, but it's also very volatile in terms of climate, and will probably become more so. So does that actually help us or hinder us in terms of raising capital? So does it surprise you, just curious in the room, to know that of the 3.4 trillion of super funds in Australia, far less than 1% is invested in farmland? Does that surprise anyone? It surprised me. When I started Nuveen only in January, thinking I love Australian agriculture, experience across the value chain, and why is that the case? But as you point out, when you sit in front of an Australian super fund with a farmland proposition, first of all, you're presenting to an expert that might be in real estate and infrastructure. Very rare that you get someone that has experience in agriculture or timberland. Then will you get someone that would invest the time to really understand the proposition of farmland? And then would you get that person to put their neck out to get approval for a new asset class when they can probably invest in infrastructure, good opportunities there? It takes a long time to get through the governance of the super funds. So yeah, very challenging in raising capital. And we know that there has been good success with high net wealth individuals and private wealth in some of the smaller Australian funds that have been raised. But of course, I don't have to tell you the diversity of Australian agriculture. The many investment strategies could have dryland cropping, horticulture, viticulture, and irrigated cropping, pasture grazing. The opportunities to diversify are endless. So I guess coming back, first of all, from an investor perspective, these are not new arguments for investing in farmland or natural capital. This is what we have in a lot of our research, and the charts you see here are based on the richest data set in the US of farmland returns. That's called the NCREIF, but the conclusions are the same for Australian agriculture. The three key arguments: first, investment in farmland and real assets brings portfolio diversification. And that means low or negative correlation to farmland and timberland to main asset classes like equity and debt. That's because these are more illiquid assets. They're held over a long period of time and don't follow the trajectory of capital markets. So if you want to diversify your portfolio, number one. Number two, over decades, long periods of time, farmland has performed well relative to inflation, inflation being a proxy for interest, and we continue to see that strong performance. And that's, simply said, driven by the fact that many of the ag outputs are linked to the consumer price index movements, and then you have that higher income return at the farm level, which comes into the land value as well. There are some discrepancies in there in some of the higher value products like almonds and macadamias that might be more price sensitive. And of course, attractive total returns. Here we see on a return to volatility chart, Farmland and timberland kind of right up there in a very nice spot of stable, strong returns, lower volatility. Maybe in Australia, that moves a little bit further up, even higher returns and higher volatility. But we know well those asset classes like real estate and equity, especially in the last few years, showing even more volatility, moving down in that risk category. So why don't we see more institutional investment there? Now, this is a game changer, and I don't think that these arguments are anything new to anyone in the room, but we have the tension between the three big gaps. The first, in terms of biodiversity, and putting 30% of the land and sea into protection by 2030, big outcome of the COP15 meeting just last year. And then closing the greenhouse gap, the greenhouse gas emission gap, net zero by 2050, as was said in the last presentation. There's already a lot of commitments by 2030. Speaking to a sample of 10 Australian super funds, 5 of them have net zero carbon commitments by 2030. They're working through how they'll achieve that, but that opens a door. And then finally, providing sustenance for 10 billion people. Again, nothing new, but we need 60% more calories based on 2010, 100% more protein, 200% more timber. Now, that opens a door. Now we're talking to investors about nature positive. We're talking about the Task Force for Nature-Based Financial Disclosures. How does that work? What is that going to mean for us? How's your pilot going? It opens a conversation on carbon intensity. What's the carbon intensity of my overall portfolio? I need something lower. Oh, timberland. Not many investors ask about timberland due to the return profile. And could I have options with my carbon? Could I monetize? Could I maybe take some carbon credits and retire them? Could I have a net zero portfolio and be able to market those products? Lots of options. And then, of course, the chart on the right really just provides confidence that long-term those farmland returns will continue as long as investors can ride out that volatility. And then in the background, you can't neglect, I guess, the trends that we'll manage through in agriculture through 2050 and beyond in terms of population. Probably everyone's well aware of population growth around Australia, North America, Europe, relatively stable. We already have China in decline. India's growing and will start to stabilize and decline. And sub-Saharan Africa is the place that will really drive the population growth. Now, when you look back at 2050 and water scarcity, obviously Australia is kind of moving from today, it's kind of a yellow-orange to a red. I would definitely argue that state of California in the US should be red if we separate that out. But there's challenges there. And to John Wood's points last night, it's that innovation and continuous focus on productivity, lots of climate adaptation projects within Nuffield, which is great to see, really important. But you probably heard in the introduction, I have Africa in my title. And I think this chart shows really clearly, as the largest global farmland investor and looking at that next frontier, lots of risks in investing in sub-Saharan Africa. But at some point, trade flows will close the gaps to some extent, and Australia will play a role in that. But there will need to be farming at scale and larger investment in that continent. So coming back to investors, what are they asking about? What are they looking at even more? Those investors in Europe, having a conversation with someone before, they're probably the most intense in terms of what they're looking at for natural capital accounting and sustainability. I won't get into any of the details here. You can take a look at our sustainability report, but we're looking at matching our experience with 3 main external methods: the greenhouse gas protocol, where we're taking measurements of scope 1, 2, and 3, where we can. As you know, we have tenants on many of our row crop farms. So some of those are assumptions and approximations, but our approach is always to do the best we can and continuously improve. And investors actually really appreciate that honesty and approach and the chance to provide feedback. The Task Force for Nature-Based Financial Disclosure pilot has kind of started out on our timberland assets, and we're really looking there to understand what's the risks and opportunities around nature on our assets. And then finally, natural capital balance sheet. That's really the core. So in many of in our historical funds, especially in the US, we have very little non-productive farmland, but we do keep a register of any natural capital. We try and put some estimates you see here around the value to investors, to tenants, to society, where we have carbon sequestration, but then also pollination services, water quality, and things that are actually very hard to quantify. So I guess as we kind of think ahead to the evolution of more conventional farmland and listening to investors and what they're asking about, it brings an opportunity with highly productive farmland, with more sustainable ag practices, call it regenerative, call it conservation ag practices, the chance to deliver the food, fiber, and timber required, but through those practices driving stronger productivity, which should increase land value, and then giving upside on carbon and biodiversity credits. On the natural capital side, we look holistically across nature, climate, and people. There we have options as well to improve nature-positive landscapes. What's just at the bottom, but the most important, is to support rural communities and thriving, and of course, resilience around returns in farmland, but also biodiversity and carbon, can really support that. But what does that look like, and is it really reasonable? This is a little bit of a unicorn view of what that kind of a landscape might look like. If you find it somewhere, please let me know, and maybe we'll go out and acquire. But you're looking at some kind of productive farmland in the middle. It doesn't look too productive to me, but it's got some good crops there. Mixed farming for regenerative ag practices. Ideally, you've got some farm forestry, and the scholar that was awarded last night, I can't wait to talk more to you. Yeah, and then integrated renewable energy and protected habitats. Now, today, if you just pretend that this landscape's realistic, it's the productive farmland where we drive a return. Carbon at 30 Aussie dollars per ton from a tree planting perspective isn't too compelling. We do believe, that will go much higher to 70, 80, but we're not there today. And the biodiversity market, we do believe Australia, with its unique capability, has to take a step there, but we don't really have a clear value on that today either. So really, to make this happen, and what I haven't said yet, but maybe is obvious, investors want it all, but they have a fiduciary duty to deliver the highest possible returns. So how do you solve this equation? I did just want to highlight, this is some ABARES charts, which you may have seen in various papers. They struck me, I think, as quite important. On the biodiversity side, however you cut it, Australia is a real standout. It's a standout in terms of, obviously, the island that we live on, the number of extinct and threatened species, unfortunately, but also the opportunities. In terms of climate-adjusted total factor productivity, we're doing really well here in Australia, and that curve will continue. We really believe that. So we see Australia as a huge opportunity for investment, and the volatility is manageable. So coming back to those questions, yes, we think that nature-based solutions might open the door here in Australia to more investment. We know that it will in other parts of the world, but we'd love to be able to invest in more Australian super funds. And the outcomes, can we have it all? Well, I want to continue discussing that with many of you over the day. And yes, we do believe that Australian investment landscape and the biodiversity and climate opportunities around that volatility are real and exciting. We've been a long-term supporter of Nuffield International. These are some of our scholars, mainly from Chile, Brazil, and the US. We will continue to be and really love the well-roundedness of the social, the personal, and the technical development. And leadership, inclusion, that's what's going to make all of this real. So thank you for your partnership and your leadership.